broadly speaking, the age, the number of years of the bull market, is that a concern for you?
You know, it's not a concern for us. When we look at the benign recessionary backdrop that we are seeing, the fact that the Fed has taken a more dovish tone, and also we are seeing the likelihood of a trade catastrophe come in, that is re-engaging investors in the market, and that's why we're seeing the market move higher.
A trade catastrophe?
Yeah, I mean,
I thought we were getting a trade deal.
Well, no, the likelihood of a trade catastrophe has declined.
Has fallen.
Oh,
Yeah.
declined.
Yes.
Okay.
Yes.
So you're hopeful of the deal, and that's part of the thesis.
Yes, absolutely.
Does it matter that the talk now is that it's going to be pushed back and maybe not this month?
Well, I think, you know, as people try and get the best deal possible, I wouldn't expect it to happen immediately. I think ultimately both sides are looking for a solution, and that's what we'll see. It may take more time than what we are seeing now, but nevertheless, we do expect a solution.
Ben, is the trade deal or not a trade deal, or the Fed a more important factor for markets?
I think those are both helpful over the next 12 months or so, but it's important to realize those things are layering on top of a fundamental outlook, which is right in the middle. This is a low-growth world that we're in right now in 2019. Recession risk is low, per Patrick's point, but upside is also relatively limited. This is not 2015-16 coming out of a low-growth world where, you know, back then rates were lower, wage growth was lower, so margins were in better shape. Chinese stimulus was higher. You can name a litany of reasons why upside might be capped this year. And so how we're positioning here is actually coming out of a relatively cautious stance in portfolios, thinking about ways to add risk from a low base. But again, being in a low growth world means that the type of risk we're adding are narrow in nature. So maybe a little bit more positive on equities, looking at credit as an interesting, very tactical option in a low growth world, and thinking about, you know, emerging markets as a key beneficiary within the relative value equity space. And so adding a little bit to risk, but narrow.